Hello and welcome to the 11th Shelf podcast. I'm your host, Sarah. Today, I'm joined by Ben from the team to talk through what this is all about. Ben, welcome to the show.
Hey, Sarah. It's great to be here. Thanks for having me.
So the reason for this episode is simple. The team created a really thorough PDF that covers everything about the 11th Shelf, but we know that not everyone is a fan of reading through documents. So we decided to create an audio version for everyone who prefers to listen. We're going to cover the exact same information, just in a conversation.
That's the plan. Think of this as the official audiobook. We're going to talk through everything, answer all the tough questions, and hopefully make it all very clear.
Perfect. Let's start with the big picture, the mission and identity of the group. Then, in your own words, what exactly is the 11th Shelf?
At its core, the 11th Shelf is a private, member-driven investment group. It's a community where we pool our capital together to collectively invest in a diversified portfolio of global assets. We're primarily focusing on established markets like the U.S. Our main goal is to provide a trusted and accessible way for our members, many of whom are from Uganda and across Africa, to build long-term, sustainable wealth.
And why was it created? What was the need for it?
We founded it to solve a critical problem. So many of us want to invest in stable global markets, but we're blocked. There are high entry barriers, a lack of trusted local options, and sometimes just limited financial knowledge. The 11th Shelf was designed to remove those obstacles. We offer a transparent, community-focused platform to own real, regulated global assets, empowering our members to bypass those traditional difficulties.
I have to ask about the name. Why the 11th Shelf?
It's a metaphor for discovering hidden value. Imagine a library with 10 shelves you can easily see. The 11th shelf is the one that's just out of reach, holding valuable opportunities that most people don't know exist or can't access alone. Our group represents that collective effort to reach that higher shelf together, unlocking financial potential that was previously inaccessible.
So who is the official entity behind the 11th Shelf? Who is managing the investments?
This is a key point. The 11th Shelf is a private investment initiative that was established and is professionally managed by Woundverse Labs, which is a company officially incorporated and registered in Uganda. This formal structure provides a critical layer of security and accountability. According to the Memorandum of Understanding, or MOU, that each member signs, Woundverse Labs is legally liable for the assets you own within the group. Operationally, Woundverse Labs acts as the custodian, managing the investment accounts and executing our clear strategy, which is focused on long-term, diversified growth.
Okay, that's a great overview. Now, let's dive into what's probably on everyone's mind. Trust, transparency, and security. Is your money safe? I'll start with the big one. Is the 11th Shelf a Ponzi or pyramid scheme?
Absolutely not. A Ponzi scheme is an illegal fraud that pays early investors with money from new ones. Our model is the complete opposite. I'll break it down into 3 points. First, real asset ownership. 100% of member funds are invested in real, publicly traded global assets like ETFs and stocks. Second, market-driven returns. All profits and losses come from the actual performance of these assets in the global market. Your returns are not dependent on new members joining. And third, verifiable proof. Through our monthly statements, you can see exactly what you own and verify its performance using public data.
That's very clear. Next question on security. Is the 11th Shelf regulated or licensed by the Capital Markets Authority, the CMA?
That's a critical question, and we believe in full transparency. The 11th Shelf operates as a private investment group and is therefore not publicly licensed by the CMA. This was a deliberate and strategic decision for 2 key reasons that directly benefit our members. First, to fulfill our core mission. CMA regulations for licensed investment managers often have mandates requiring them to invest primarily in local or East African assets. This would fundamentally prevent us from pursuing our core mission of providing access to a diversified portfolio of global assets like U.S.-listed ETFs. Our entire purpose is to open doors to markets that the current public licensing framework doesn't accommodate.
And the second reason?
The second reason is to maximize your investment. The public licensing process is rigorous and costly. By operating as a private group, we avoid these substantial overheads. This ensures our operational costs remain extremely low, allowing the maximum amount of your capital to be invested directly into the market. So instead of a public license, our entire legal framework is built upon the MOU, which is a private, legally binding contract.
So, if there's no license, what is the legal protection for my money?
Your legal protection is multi-layered and centered around that MOU and the formal structure of Woundverse Labs. There are 3 layers. 1, legally binding contract. The MOU isn't just a guideline, it's a formal, legally enforceable contract that outlines the precise terms of our arrangement. You can think of it as our constitution. It covers the roles and responsibilities of Woundverse Labs, the investment strategy and risks, how contributions and withdrawals are processed, the fee structure, and confidentiality rules. We require every member to read and fully understand this document before joining.
Okay, let's move on to how it all works in practice. Can you walk me through the investment process from start to finish?
Of course. Our process is designed to be simple and seamless. There are 4 steps. 1, create your account. You start by setting up a personal account with the 11th Shelf. 2, contribute funds. You can add funds to your account at your own pace, which are then pooled with other members. 3, we invest collectively. We invest the pooled funds into our single diversified portfolio. And 4, own your share with units. Your ownership is represented by units. As the value of our investments grows, the value of each unit increases, growing your personal stake.
And what exactly are units and how are they calculated?
The easiest way to think of units is as your personal slice of the entire investment pizza. The more you contribute, the bigger your slice becomes. The price of each unit is calculated automatically at the end of every market day, based on the performance of all the assets in our portfolio. This ensures your holding is always up to date. When the portfolio generates gains, the unit price increases, and everyone benefits proportionally to their slice. The same principle applies to losses.
And what specific assets do you invest in? Is the portfolio static?
Our portfolio is dynamic. It's primarily composed of high-quality, global assets, including U.S.-listed ETFs and select individual stocks from financially sound companies. The specific assets we hold can change over time as market conditions evolve. We believe in an informed community, so before making significant changes, we share our research and reasoning with all members via our WhatsApp group and email. We explain why we're considering a particular investment, and members are always welcome to provide feedback.
Who is managing these investments, and what is their experience?
We believe that successful investing is proven through consistent practice and results, not just academic qualifications. While our custodian is well qualified, we focus on practical expertise and measurable performance. That's why we hold ourselves accountable to clear, objective benchmarks.
What benchmarks do you use to measure performance?
We primarily aim to prove we know what we're doing by consistently outperforming relevant market benchmarks. We measure our performance against 2 key standards. The first is the S&P 500, which is the benchmark for the 500 largest U.S. companies. The second is Ugandan dollar-denominated unit trust funds. We also compare our returns to the average performance of local dollar-based funds to ensure we're providing superior value. And so far, our track record shows that we have been consistently successful at outperforming both of these benchmarks.
That's a bold claim. Let's talk about membership and financials. Who can join?
We welcome anyone who shares our vision for long-term collective wealth building. Our community is built on trust, so every prospective member goes through a simple but important onboarding conversation. It's to ensure you fully understand our strategy, our collaborative approach, and the terms of the MOU. This helps us grow a strong, informed member base.
Is there a minimum amount required to invest?
No, there is no strict minimum amount required. We want to make long-term investing accessible to everyone. However, to help people start on a meaningful path, we do advise an initial contribution of around 100,000 Ugandan shillings. This is just a recommendation. After that, you can contribute any amount you're comfortable with, and we do encourage members to make regular monthly contributions, no matter the size, to benefit from the power of compounding.
Now, fees. Can you be very specific about what you charge?
Yes, we believe in a fair, transparent, and performance-driven fee structure. We charge a single fee of 0.5% applied only on the profits you earn. So if your investment grows by $1,000, our fee is just $5. If there are no profits during a period, you pay absolutely no fee. And what we don't charge is just as important. There are no entry fees, no annual management fees on your total balance, no withdrawal fees, and no hidden charges.
What kind of returns can someone realistically expect?
We are focused on long-term sustainable growth, not get-rich-quick promises, so we do not guarantee specific returns. However, to set a realistic expectation, well-diversified global stock portfolios have historically delivered average annual returns in the range of 7 to 10% over long periods. While short-term performance will always vary, our goal is to achieve consistent growth that outperforms our benchmarks over time.
And how does someone withdraw their money? Is it a difficult process?
It's a straightforward process. You can submit a withdrawal request at any time through your member portal. To protect the entire group from being forced to sell assets at an unfavorable time, all withdrawal requests are processed together on a set monthly schedule, typically between the 24th and 26th of each month. There's also some flexibility. In some cases, if another member wishes to buy out your position, the withdrawal can be processed much faster.
Okay, this brings us to our final section, getting started. If someone is listening and is ready to join, what are the exact next steps?
We've designed the process to be as transparent as possible. First, visit our website and review the MOU. The first and most important step is to visit our website, 11thshelf.com, and download the latest Memorandum of Understanding. We make this publicly available so you can see our legal framework before you even create an account. Please read it carefully. Second, create your account. Once you're comfortable, you can create your personal account directly on our website. Third, verify your identity. For security, you'll go through a simple verification process. And fourth, make your first deposit. After you're verified, you can make your initial contribution. Your account will then be activated.
And what happens right after someone becomes a member?
The moment your first contribution is processed, you become a full part of our community. You'll get full access to your member portal to track your units and their value. You'll be invited to our private members-only WhatsApp group where we share insights. And you'll automatically be added to the distribution list for our detailed monthly portfolio statements.
And final question, what if someone has questions during this process?
Then they should absolutely reach out. We are here to help. Even though the process is self-guided, making a fully informed decision is essential. You can contact us, and we'll be more than happy to clarify any points or assist with the sign-up process with absolutely no pressure.
Then this has been incredibly thorough. Thank you for walking us through all of that. Any final thoughts for our listeners?
Just that we're building more than just a portfolio. We are building a community of informed, empowered investors, and we look forward to welcoming you to the 11th Shelf.
Wonderful. Ben, thank you so much for your time today. And to everyone listening, thank you for tuning in.